Hello, beautiful people. Hello, traders. Welcome to. I shouldn't say that this is just a new installment, but rather it is a continuation from a video that I made yesterday. Okay, it's on my YouTube channel. You can just go ahead and watch that because right now all I just want to do is to go deeper into the ideas that I shared yesterday. Yeah. So, and in case you're wondering, I'm using this broker, Deriv. It's a good broker. Just testing it out, and as you can see, I'm using my demo account. Okay, this is my demo account. Yeah. So I'm just gonna go ahead and start with the daily. Remember, in that video, I did mention that we had that change of character, as you can see, the internal change of trend, and this is where the market broke structure to the upside. Now, in that video, I did mention that going into next week or going starting this week, today's on a Monday, what you should be expecting is a move to the upside. All right, we should be expecting that move to the upside, possibly to this refined daily demand zone. But I also said that from where we are, we may expect a move to the downside. And the reason for that, if you are an SMC trader, sorry, if you are an SMC trader, you know that this is the supply zone that we are working with. And this is just the refined zone. Now, the bigger zone would be this one right there. Okay. And as you can see, price has already done what? Price has already tapped into that zone. Now, let's just go to the daily on trading view. And this is what we have. Okay. This is the bigger zone. Yeah. This is the bigger zone. As you can see, price has already tapped into that. So, but that would be my refined zone. Okay. Now going back, this is my refined zone. So that is where I'm expecting price to come to, and then for us to you know for us to sell this currency at least to the mean threshold or to the 50% of that move of this move. All right. So now we have that as the internal protected low. Now we are just waiting for the market to put the high. Okay. So again, going forward, what I at least expect to see a move to the upside and then wait for that retracement to kick in. But I also want to emphasize on this. We may see the market actually selling from where we are because we've already tapped into our supply zone. Now, with that idea in mind, let's just go to the 4 hours. But before we go to the 4 hours, it's also very important to note where we are. Now, I'm going to use my trading view because the Reef doesn't have that much data. I'm going to use the trading view to just explain something to you. So the market broke structure to the upside. This is where we did that. And I think yesterday's video will explain that in depth. So we broke structure to the upside, and once we broke that structure to the upside, what we usually expect is a pullback. Again, this is the illustration that I made on that video. If you haven't watched that video, it's very important that you do. Okay, so you can kind of see that we are moving, or price is bullish. Okay, price is very bullish, and we broke that structure to the upside. So once we break that structure to the upside, what do we expect? We expect a retracement, kind of like an ABC movement. So this is the ABC. Let's just that is the move A, that is the move B, and that is the move C. So going by that example, this is what we have. So we broke structure, movement number A, should be here, sorry, movement number A. This is now movement number B. What now we are expecting to put is movement number C. All right, that is what this illustrates. Movement number A, B, and C. A, B, C. So right now, there are obviously signs to tell us that a movement has started, and one of the signs that I use is the internal structure. So what do we mean now inside? Because this is the larger picture. Inside these we have smaller movements, and this is what I call the internal trend. Okay, this is what I call the internal trend. And the internal trend, kind of like they are the precursor to the big trends. Okay, these small movements inside of the bigger movement, because this is the bigger movement and this is the bigger movement. So inside of those big movement, we have this small movement, and that do form the trends on the lower time frames. Okay, these small movement, they are big trends. Okay, they are big trends on the lower time frames. That is one of the things that you need to understand. So now the movement, this small movement, kind of has given me, let me just show you. It has given me, we've already broken that structure to the upside, and that is exactly what has happened there. Now we broke structure to the upside, and that tells me that quite possibly, or it is possible that we may see, or it is possible that movement number C has begun. And that basically is how I look structure. Okay, that is how I look structure. So now with that understanding, I know that movement number C has begun. So once we break structure to the upside, all what I'm expecting or what I'm waiting for is for the market or for the price to tap into a supply zone like we have here. Once we tap into that supply zone, that should kickstart movement number B. Because remember, price is fractal. Remember what is happening on this bigger, let me just bold that. What is happening on this or in this bigger trend was what is happening, the movement that we are expecting to see, that ABC movement is also happening on the lower time frames, or it's also happening on these small trends. Okay, is also happening here. That ABC movement. This is the A movement number A. So what we are expecting, or what we are anticipating, is for price to tap into our supply zone, and that should initiate, or that should begin our movement B, coming into the mean threshold, that is the 50% level, and then movement number C to kick in. I hope I'm clear on that. I hope I'm clear on that. So that is the whole idea. That is the whole idea behind me telling you actually not to trade GBPUSD last week, because we were not clear. Okay, price wasn't that clear because we were stuck in between. The fact that we've tapped into our daily demand zone and the fact that the internal trend hasn't changed. We were still stuck in that bearish trend. All right. So yeah, so now starting this week, what I'm expecting is for price to come into our daily demand zone. Let's just go back to this. What we're expecting is for price to tap into our daily demand zone. Once we tap into our daily demand zone, I then of course expect movement number B to kick in. Once the movement number B kicks in, all what I'm waiting for is at least to come into one of these daily unmitigated zones. Let's just go back here, and that should be, this is the move, or this is the area that I'm expecting at least price to come back to, and then we go. But of course, what I normally say, if price has already made it to the 50% level, and I'm assuming this is the If price has already made it here, I mean, any buys from this level would be okay. Nobody would fault you for that. Okay, but then let's just delete that. But then the most the better zone would be the 61.8. If price manages to do that deeper pullback, that would be okay. At least anywhere below the 50% level, that's fine. You can look for your buys. All right. So with that in mind, let's just go to the 4 hours. Let's just go to the 4 hours and see what we have. Okay. So now this is the 4 hours. And as you can see, the trend, I've already indicated there that the trend has changed. Right now, we are no longer bearish. The 4 hour swing structure is no longer bearish. We are bullish. All right. So this is the 4 hours protected low, and this is the 4 hours targeted high. All right. So I might as well mark it there. This is the 4 hours targeted high. Okay. 4 hours targeted high, like that. That should be top. That should be right. Yeah, so that is our 4 hours targeted high. Of course, what we are expecting is for the move back to the mean threshold, as I was illustrating on the daily. And by the way, if you have everything, or if you have your analysis done on the daily, the 4 hours is it just gives you a lot more details. It gives you a refined, yeah, because we normally trade the 4 hours. That is what I normally trade. Now the 4 hours, the trend has already changed. So what am I expecting? I'm expecting for that pullback into that, and then of course you can sell these. You can sell these markets all the way to the 50% level. Once we do that, then of course we expect that movement to the upside. But what do we know? As we have already looked into the daily structure or the daily zones, because now zones do play an important role here. What we've seen is that we may get a situation where price actually moves to the upside to mitigate these daily supply level. Okay. And as I said on my last video, that this zone, okay, this zone is too clean of a zone. And that is the first thing that I noticed with that zone. It is too clean of a zone. So we may end up using this zone as inducement. All right. We may end up using this zone as inducement. And the reason for that, I did mention that the zone had already been mitigated. Let's just look at that. The zone had already been mitigated because you can see after its creation, we get that explosive move to the downside, and then price returns and mitigates it. All right, mitigates it, and then quite it's quite sluggish. Um, the market ranges a bit and then taps it a second time. And then once we do that, you can see the explosive move to the downside. All right. So this zone gets left behind, but then again, the market mitigates it, and that is what initiates that move to the downside. So that fact alone, at least I know that even though there may be orders, uh, my mentor has taught me that even if there may be orders, at least on the week, right? And that is where we can refine that zone using the 1 hours. Okay, that is why I like the 1 hour, because it gives me a refined. It is the time frame that I use to refine these zones. So yeah, that fact. The fact that we do have that daily demand zone quite clean, tells me that this zone, the zone that I identified, it may be used as an inducement zone. Okay, kinda to induce early sellers into the market and then use them for liquidity. But then again, I did also mention that anything can happen. Anything can happen. And the fact that we may be looking at the zone as an inducement zone, it doesn't necessarily mean that we can sell from there. When the market condition or when the conditions that we look at all align, I'm happy to take that trade. I'm happy to sell from that level. Okay. So if that fails, then we are looking at, of course, this level. All right, we are looking at that level to sell from. So yeah. So once you do all your analysis on the daily time frame and the 4 hours time frame, the 1 hour is just for refinement. I use the 1 hour just to refine, and then yeah. So you can see we do have that week zone. This is the week that I was just illustrating. So we have that zone. At least I want to at least see the market making its way all the way to the 1 hour zone. If we can get that, that would be perfect. All right, that would be very very perfect. So yeah, that is it. So I'm expecting that. I mean, of course, if you join my mentorship, sorry. If you join my mentorship, you'll of course understand why we have that zone marked out, and our entry model really relies on that zone. Okay. Yeah. So yeah. So if we my analysis or the way I'm looking at things is that we may see actually the market making or pushing all the way to the upside, either to this zone or even to this zone. Okay. So those are the two areas, and then of course to buy, we can of course expect to buy from this is the zone that I have already marked out, but all of these zones are good zones that you can buy from. Okay, all of these zones are, but the ideal zone for me would be this one right there, the one that I've already marked out. So yeah, so the 1 hour is just to define my zones, and just to look at where liquidity has been grabbed. I use the 1 hour for that. And then of course the 15 minutes is for my entry. Just to introduce you to my entry model. Um, so you can see on the 15 minutes we've already gotten that change of character. So if we've gotten that change of character, then that means the high becomes a very, very strong high. And then we may use that high for inducement. All right. And that is why I'm telling you it is quite possible that we may see the market actually coming all the way to this 1 hour zone. All right. Using that high as an inducement to induce early sellers into the market. We can already see that early sellers have already been induced to the market because many people are looking at that movement and they're like, wow, the market has already started to sell. So we might as well, get into the wave. So yeah, I'm not ready to sell yet. I'm just waiting for my entry model to play out. So that is it for GBPUSD. I honestly think it's very, very important, and that is why I decided to do this video, just to go a little bit deeper, because TradingView only gives us or allows us only uh 20 minutes, and that's it. So yeah, so that is the GBPUSD. Let's just go to EURUSD and let's see what we have. Again, starting with the daily, like I mentioned yesterday, at least the swing structure on EURUSD is quite established. We can see that we are downtrending. All right, the market is in a downtrend, and then of course I did mention that EURUSD, the internal structure is not that well defined. So what we are gonna use is the fractal structure, but then we will get that in the 4 hours. So now the daily, you can see the market is on we've already tapped into that. We've already tapped into the supply zone. Okay, we've already tapped into that supply zone. After we mitigated the supply zone, you can see the market never really went anywhere. So it is quite. By the way, the reason, or I tend to look at these things more from a logical perspective. Any supply zone or any demand zone, the work of a demand zone is to make sure that price, or you buy, or price is bullish from the demand zone. And the work of a supply zone, at least from my own perspective, is to make sure that price remains bearish until we break the targeted low or the targeted high. Okay, so with this supply zone, if there were enough orders in the market, at least we should have expected, or if there were enough sell orders in the market, at least this should have taken out that low. All right, that should have taken out that low. But the fact that we only came all the way to these levels, possibly quite reacting from a demand, at least from a demand in this candle, and then you can see the market is pushing. So right now we are kind of stuck in between those two levels. So we have the demand level and the supply level. But the fact that this supply never outdid, um, it wasn't strong enough, to push buyers out of the market. That tells me that quite possibly it is possible that this level may fail. You may actually see price actually pushing above it. All right, or we may see price, basically we may see this level fail. Okay, and what do we have above it? We have that level. Okay, we have that level, and if you really think about it, this was the level that initiated all this larger move to the downside. Okay, and this was just these this small reaction was just to, because the market was reacting from a demand level right there, and then it failed. So it is a good flip zone. It is a good flip zone, but right now it has failed to do its job, and that is one of the things that I look at and I'm like, okay, it failed to do its job. Right now the price is returning back to the zone, so it's quite possible that we may see that level fail. But then again, that is just a speculation. It's not proven, but I mean, I I expected this level at least to push the market all the way until we break this daily targeted low. But the fact that we haven't done that, and then the market is returning to the zone, it means that this level there are not enough supply zones at that. Sorry, there are no supply orders in that level. Okay, and we may see actually the demand taking out that supply. And then what do we have above it? We have this level, which was initiated that push to the downside. So that kind of is more like the strongest zone compared to this one. So now with that understanding, what I expect, let me just draw that for you. What I expect is something of the sort where we come back to that zone, okay? And then something of the sort, okay? That is what I expect to see with these, with EURUSD, okay? So now moving on to the 4 hours. Let's just go to the 4 hours and let's see what we have. So now the 4 hours, as you can see, we are bullish. This is the 4 hours targeted high. We are bullish, of course. Price has already tapped into that 4 hours level. All right. Price has already tapped into that. Of course, this is also the daily supply level. But then I told you that that was my theory, whereby I mentioned that we may have no orders left, or the amount of orders left behind not that much. So even though that may be the case, this zone might still work. All right, the zone might still work, whereby price may push. Right now, I'm just looking at these levels, kind of in a 50-50 situation. It may or may not work. All right, it may or may not work. So yeah, there is that. So we are in that. We've already tapped into that zone, and as you can see, price has had that good reaction. And all right now, all I'm just waiting for is for the market to break below our fractal protected low, and also again to see the interaction that we have between these um, supply level and these demand level. So if this supply is strong, it should outdo, or it should outdo this demand level. Okay. So again, let's just go to the 4 hours again. We did break structure to the upside, and as you can see, we've already pulled back. So what we are expecting is for the market to take out that high. Once we take out that high, tapping into that, and then that is also another factor that I'm quite considering, the fact that the 4 hours is quite bullish, and we have that for the targeted high. According to my notes on structure, I expect that move to continue. I expect even if we get a reaction, it should not be a deeper reaction all the way to the 50% of that range, of that leg, because if we do get that, then the market would be ranging. So right now, all I'm expecting is for the market to take out that high, tapping into this um, supply level, and then that should kickstart move number B. All right. So again, market moves in phases. Right now, we are in phase A. I would categorize this as phase A. All right. Once we tap into that, um, once we tap into these 4 hours supply level, and then move number B may begin. All right. Yeah. So going into 1 hour, again, 1 hour is just to refine, and this is what we have. Price has already tapped into that. And then, of course, you can see the reaction or the interaction that we are having in between the supply and the demand. Right now, price tapped into the supply zone. As you can see, the reaction that we are getting, price came into the demand zone, and then you can see the reaction that we are getting from that demand zone. So right now we are just kind of stuck in between the two. Ideally, for me to enter, I would just wait to see whether price actually takes out these, if it takes out this demand level. If it takes out that demand level, then I know I would be a little bit confident with the sales. But until we get that, I'm just holding, and waiting for the market actually to tap into it, because I honestly think this is just an inducement level. And I did mention that in the last video. Again, if you haven't watched that video, it is on my YouTube page. Okay, you just go ahead and watch that video. Yeah, it will give you a little bit more clarity. So the 15 minutes, this is where I frame my entry ideas. Yeah, so nothing much going on here. Just waiting for the 1 hour demand level to fail. Once that happens, then let me just show that on the minutes. Once that fails, and this is it, yeah. Once the demand level fails, then you may enter the market. All right, and you may enter the market. So yeah, so that is what we have for the two trade ideas, and I think this at least gives you a deeper dive compared to yesterday's video. Let's just you know let me just analyze the DXY for you. So yesterday I did mention that we should be expecting that move to the downside, that bearish continuation moves to the downside, okay? And the reason for that is because we have that daily demand zone, okay? We have that daily demand zone, and that is acting as the magnet for prices. You can see the internal of the DXY, the internal structure of the daily, sorry, the internal structure of the daily time frame or the daily chart for the DXY is quite bearish, right? We are breaking structure to the downside. So after that break of structure, what I expect is for the market to tap into that daily demand zone, and then that should initiate that phase number what? Phase number B, because this is this is phase number C, sorry. So this is where we broke structure to the upside. The market is pulling back, tapping into that demand zone, and then phase number C to begin. So the DXY is quite bullish, all right? The DXY is quite bullish in terms of the major structure, which is the swing structure, but bearish in terms of the internal structure. But we normally say that the internal structure is bearish. In this case, the internal structure is bearish just to facilitate move number B. All right. Again, this is move number A, move number B coming into our demand zone, and then move number C should begin once we tap into that demand zone. Right. Now moving on to the 4 hours. Let me just delete this. Moving on to the 4 hours, you can see the 4 hours is quite bearish. All right. The 4 hours is quite bearish, and also the internal of the 4 hours is also bearish. The internal is also bearish. And then, of course, we're expecting for the market to tap into our daily demand zone. Once we tap into that daily demand zone, then we can expect those moves to the upside. Again, I normally don't analyze the DXY because the DXY is the inverse of EURUSD. Whatever is happening on EURUSD is happening on the DXY, only that the chart is inverted. If I do this, if I invert that scale like that, and then by the way, this is the video that I was talking about. It's on my YouTube page, or even on TradingView. Well, for those of you who would like to watch it on TradingView, this is the video that I'm talking about. You can just go ahead and watch it. All right. So let me just delete that. I just want to show you that the DXY and EURUSD are one and the same thing. Whatever is happening on the DXY, the price action that you're seeing on the DXY kinda like mirrors. It mirrors what's happening on EURUSD. Just give it a minute. Mirrors what is happening on EURUSD. So this is it. Let's just go to the 4 hours. So you can kind of see the price action on the DXY and the price action on EURUSD. All right. So this is EURUSD and this is the DXY. As you can see, kind of a similar price action that you're getting with the DXY. Also the same price action that you're getting with the EURUSD. So that's kind of the reason why I don't analyze the DXY. because once you understand what's happening on the Euro USD, you know, it is very, very much similar. So yeah. So that is, I think that is all I had for today. Just going a little bit deeper with my trade ideas in regards to these two trades. Okay.